Hello guys, welcome back to a new video. Today we are going to be talking about the regular trading hours, the opening range gap and regular trading hours gap, and how we are going to use them for our daily basis, our already model, or if you guys want in the future, I can make a video of a regular trading hours model. Um, so regular trading hours is a specific time windows where the market makes a gap, uh, taking apart the overnight session and the pre-market sessions, meaning we don't have Asia session, we don't have London, and we don't have 8:30 pre-market session. This gap that will be created on this time will be the opening range gap, also known as regular trading hours gap. We can use the regular trading hours here on TradingView. If you go down right on the bottom part, here you will find probably you have in electronic trading hours. If you hit here, here, sorry, um, you will find the regular trading hours, and if you click it, you will see what we are talking about. Which is just like this. So this is a gap where, as you can see, we have jumped from 16 hours to 9:30. So there's the opening range gap and regular trading hours gap. Let's jump to the next phase. How we frame the regular trading hours gap. We place a box or tool or lines, whatever you want, from the close to open of the candles on the regular trading hour view. You can also make this on the electronic trading hours, but will be more tedious to do, and you will be needing the array tool to extend it all the way through time. So you place the line or the box from 1614 close to 930 open. We must highlight the CE, aka the 50% of the gap, as it will be a crucial point and sensitive point on the market. So we will be marking this just as this. If you saw the previous video on my channel about power of 3, we already know the formation. So as this is a bearish candle, we open here and we close here. So we mark the close and then we use the 930 open. Just to highlight, the 1614 close doesn't need to be precise the 1614. Like we can use any other time frame to mark it out. Just to be more precise for the explanation of the presentation. Let's jump to the next slide. Which time frames we will be using on regular trading hours? This part is important because as we don't be having the overnight sessions and pre-market session, the times that we'll be displaying will be changing, meaning we don't be having 1 hour charts, 2 hour charts, as they will be useless. Why? Because the candles will be having a time distortion, as we will be opening on a different time. Watch this. We open 9:30 on the 15 minutes. We jump to the 1 hour. Opens 9:30, but the next candle will be opening 10:30, meaning it's going to show us fake data, nothing that we will be finding some value, and this can trick us and fake us on PD arrays or some data we don't want to see, as this is wronged. So the higher time frame we want to be using, or the one I use, and I'd recommend you doing the same, is the 30 minutes as maximum, because there is no time distortion here. We open 9:30, then 10:00, 10:30. We continue that way, so we don't have any weird stuff. also 15 minutes, 5 minutes, and 1 minute as this show. The 1 minute can be optional. I rather stay a bit away from the M1 unless it's time to hit the button and manage the trade. But otherwise, I like to make my analysis on M5 and don't even drop to M1. I prefer to miss out the move than be taking a bad trade on the M1, as this can be faking you quite a lot on the first hours of the market opening. What's the relevance of the regular trading hours gap? Why want to be interested on adding the regular trading hours gap or regular trading hours to your current model? This can help you search for targets as many times, not always, many times the regular trading hours gap might not get filled on by the 100% of it. Um, Meaning it will be a part lived on field, and sometimes they will be 100% on field or most of it on field, and we can see these regular trading hours gap that aren't got filled get filled on a future, so we can make kind of a like a bias, make a confluence to our bias. Just don't base completely on this because it can leave a regular trading hours gap on field for quite a lot of time. Um, Also helps you to take partials and to know if the institutional order flow is still on the same direction you want to be or against you, to test the drawn liquidity you have from your analysis. As I said here, we will be marking the CE, and it will be playing a crucial role on how we can um, anticipate and be working on regular trading hours. The CE is a very, very important part of it. As you, if you are paying attention on the Discord on the last couple days, then it did a review and I spilled a couple sauce of similar things of the CE. So if you want, you can check that out. We'll be not talking it here. I will be pointing out you the main things I like to do and the things I do with regular trading hours. So the next step, the CE of the regular trading hours gap. We should always have the CE marked out, as this CE will help you know if we want to buy or sell according to the draw liquidity. If also, it will be also a sensitive point to know if institutional order flow is still in that same direction. Can this CE can also form an SMT with the crossed asset. So let's say, I think this is an example, but let's say right here, let's say the dotted line, it's ES. Oh, ES didn't reach out to the regular trading hours. Well, this is our regular trading hours gap, as I talked. So with these regular trading hours, we marked out the CE, which is this solid line, and we can we can often see SMTs with the CE or with the thing I talked to you about of the price reviews, and this can be quite useful, and they are not going to be able to see it if you are on the electronic trading hours. So let's say the ES, which is the cross of NQ as well as YM, but I rather use ES only. ES didn't reach out to the CE of the regular trading hours gap. Meanwhile, NQ did tap on the regular trading hours CE. This can give us a form of SMT. saying the market it's willing to tip his hand or for the SMT direction. As if you may know, the SMT always gives an expansion, but SMT without a drawn liquidity is useless, as SMTs against drawn liquidity will be getting ramped out. So we can expect SMTs by the CE of the regular trading hours gap. We mark the CE, and if we are below the CE of the regular trading hours gap, we will be searching for longs, just as the discount and premium dealing range, just as this dealing range where you sell above on premium and buy below on discount. We want to be doing the same thing here on regular trading hours. Okay, so the CE is a very crucial point for us to know where the market can be going and where it can be making an expansion. If the market doesn't get all the way through the CE and just take a stop hunt or make a little retracement or a rebalance, this can say that the market is on a trend against a trend away from the regular trading hours. Let's say in this case scenario, the price action respect this fair value gap and didn't come to fill the regular trading hours gap. This can be a sign of a trending day or a classic buy or sell day. So you also want to have an eye on that. Here's what I talk about, their dealing range, implied dealing range on the regular trading hours gap. We will use the same logic of a normal dealing range, but on the gap of the regular trading hours mixed with a PD array, it can be so strong for any entry model. So you want to buy below of the CE as any model, as you usually do, buy on discount and sell on premium, just as that. So now here comes the part where it gets quite interesting on how you can mix it up with the normal hours you use, the electronic trading hours and the regular trading hours. So we want to use the PD arrays made on regular trading hours, meaning from 9:30 to 16:40. We want to use those PD arrays. The electronic PD arrays, yeah, we often see it react to, but trust me when I say this, go on your charts and see it by yourself. The regular trading hours PD rates are more precise, and it's PD arrays with less noise, as we don't have the overnight sessions, the pre-market session. Clears out the noise and it helps you to reach more precise trades. And for the electronic trading hours, we want to be searching and be know where the stops of the electronic trading hours are. So that's why I think it's more important to have a layout of electronic trading hours or the regular trading hours. You can mix them up to, like, you been chaining up regular trading hours and electronic trading hours, but I think it's a bit more tedious to do. So now you know the fundamentals of regular trading hours, aka your opening range gap and regular trading hours gap. Let's jump out of what we've been explaining with some real market examples. So as I said, the CE is a 7 civil point of the regular trading hours gap. The solid line is the CE. And remember, we mark it out from the close to the open of the candles. So in this case scenario, remember if the CE, if price action don't reach the CE, it means it can be on a heavy trended market. Sorry, it can be on a heavy trended market for that day. And if it does reach to the CE, and we have a nice setup and a nice drawn liquidity on the buy side, for example, as this one, we can be using it to long for the targets. As well, we could be shorting and taking partials or closing in the full position on the CE. Both works very well. Regular trading hours works with a great combo with MMXM and Power of 3, market maker models and Power of 3. As you can often see this paired up with a sensible point, the CE, as this case. And we have here an SMT between regular trading hours and regular trading hours made on the SMTs made on the regular trading hours are high probability rather than electronic trading hours SMTs. And if you pair the SMTs with the drawn liquidity, they are stronger. So here we can see that NQ did reach to the CE. Meanwhile, ES didn't reach out to it. So here we have the SMT between NQ and ES on the CE. Here you can trade with whatever asset you want. I'd rather stay on NQ because sometimes ES plays you out. But if you want me to explain on another video, a short video of SMT or and a cheat sheet of SMTs, I can do that as well. So let's pair this up with what we've been teaching. So here we have a failure swing, a low resistance liquidity, and our final target, buy stops. We have the SMT below here with ES. So market is willing to make higher prices as SMT comes with an expansion. Now let's try to pair this up with some sort of PD array or a stop hunt. Go back to the day. This, see if we have some sort of PD array. 30 minutes as is our higher time frame for the regular trading hours. We don't have much, so I guess will be trying to search up for some electronic trading hours stop hunt. On ES, we do have an PD array in 5 minutes here. And let's try to pair this up with electronic trading hours. This can, the next you will be seeing, it's only possible made with the dynamic regular trading hours gap pro indicator from to the degrees and the engineer. So if you have it and you're interested on the regular trading hours, it can be very helpful. So what we are seeing like these like ghost candles are electronic trading hours candles, and the one with color, the regular trading hours. So let's now search for a stop hunt near. Remember, you wait, you are patient So you see that market taps into it, and we still be waiting. Do this the same here. For any SMT as well. You can mix the SMTs, even though the regular trading hours SMTs are higher probability. You can mix them both, and I found it very useful as well. And this, here we can see yeah, ES and Q did take this top hunt of electronic trading hours, and ES didn't. It's the same low, and makes the total soup of it, meaning we didn't close with candle body, and we start pushing away from the turtle soup, the stop hunt, and mixed up with an SMT, which gives us another confirmation. So we already have the discount, the implied dealing range, SMT with the CE, ES not willing to go lower, and we got failure swings on the high. We have our drawn liquidity, so we just can wait for the market come to our entry. Say we use this fair value gap, this BC. You place your entry right there. Maybe if you want with the order block, portion block here, and you place your stop loss, I don't know, maybe here, or on the total soup, or the pairing. You target 5 stops, you get a 5R trade. Simple as that. Yeah, you take your execution on London, on lunch, sorry, on the 12:00 power 3. If you don't trust that, doesn't matter. You can wait for another entry. Right here, you have the older one. First for value gap. Right here, you get here on the macro ones. The launch is almost finishing. Get another good trade. So I like to use the regular trading hours to give us a target or year out a session, and makes the PDR race more clean, and the drawn liquidity as well. Let's try to search another example. Um, Here an example of regular trading hours that didn't get filled, doesn't even reach the 50%, nothing, just straight down. Very heavy trending market. Um, Go back to trading hours. Here's another same example. Didn't reach out to the CE. In this case, we don't have SMT. We can have, just to point it out, we can have SMTs between regular trading hours sessions, meaning you can get a SMT between this high and this high, even though the session was over here, right here. That can work really well. Example here, I was talking about this with Danny, or I don't remember if I talk about it on the Discord. You can see here regular trading hours on NQ didn't reach to take this high. Meanwhile, ES this take this high. So you can take a short right here, and you could have taken partials on the CE if you want. That's a very safe um, trade management, in my opinion. Very useful. So you have the SMT. Let's see if we have some stop hunt on the electronic trading hours. We don't have any further highs. Make it cleaner to make it better. Doesn't matter. We have the SMT. We have our target right here. This is an example of how regular trading hours helps you clean out your own liquidity. Because if you were on the electronic trading hours, you wouldn't be able to look at that drawn liquidity as as easy as you can see it on the electronic trading hours. You can see like this is all over the overnight session, so it kind of blurs out the price action. And with the regular trading hours, it helps you to clean that out, to have it things more clear while you take a trade. So you already got the SMT. Go the lower time frame. Here the 3 minutes. Here you have this failure swing, makes a turtle soup. Beautiful. You can take your entry right here on the turtle soup, or wait for something else, maybe with a change state of delivery. Right here, also clean. You miss that out, you can also get further down, more deep on price on the lower time frame. This would be my last opportunity to enter the second silver bullet, the second leg of the market maker, aka the silver bullet. Great. Weak price action, straight to the point. What else? Uh, um, oh yeah. So once these are on field, or for example, this week I had an eye on these regular trading hours. Yeah, as it was completely on field. Remember the close and then the open candle. So I extended the price, the regular trading hours gap, and this was a very heavy trend market. So it goes straight out to it. But you can see how after it got filled, it kind of works. It works like the same way as inverse fair value gap would do. It offers support or resistance to the market. It can help you to get some trades as well here. You could have entered here maybe. I actually take a trade. This one, I don't remember wrong. Or with other case scenario, very similar. So you can use this type of stuff of the resistance after the regular trading hours gap get filled to continue with your idea to see how price action is handling that level. I also like to um, mix the electronic trading hours with the layout. That way you can have like a more clear view of like where the accumulation is happening, like this or this. Like you can see with this indicator, helps us to close the candles where the most impactful move of the day most of the times are made, which is on the regular trading hours. Let's search for another. Here, this one's good. Here, example how you can mix them up. Here, so check this out. On the regular trading hours, we have this inverse fair value gap, which you wouldn't be able to see. Well, you would be able to see it on the electronic trading hours, but not as clear as this is. So price action on electronic trading hours is respected. Already hit it once and twice on the electronic trading hours, but on regular trading hours where the PDRA was made, it hasn't been tapped. And now we have the regular trading hours PDRA. Let's now use the electronic trading hours stop hunt, but here another turtle soup. You can see already how regular trading hours and turtle soup are a great combo. And we have, remember, open, close to the open. We didn't reach to the CE, but this means heavy trending market coming. Market wants to go higher. It works just as the weeks with quarters and the equilibrium of the weeks works same. So you have the stop hunt, the PD array, the time 9:30. We have our target. We can go for the low hanging fruit right here, which if you enter on the total sub, that's absolutely good. You don't need more. You can also target the internal range liquidity, the fair value gap, this DCB, the rejection block, or the CE of the regular trading hours. You see how precise the CE of the regular trading hours is. So let's zoom a little bit more. Here you can see how market makes an accumulation, manipulates right on 9:30, the regular trading hours. You don't want to enter on the total sub. Maybe if you want to be super safe, you can enter on this order block right here. If you didn't catch that, you can enter on this small easy 15 minutes right here. Now drop to a 5 minutes. You can see how the 15 minutes PD array, it's larger on the 5 minutes PD array. So and you can see how another accumulation is made here. We have another sell stops made by the fair value gap on the higher time frame. Another turtle soup, an accumulation once again, just as this one. So if you miss this move, you can enter once again here. And you drop lower. You can probably search for an SMT right here, not the previous one. Hold up. Up this low. Yes, did take it. Trading hours. Well, we can see the indicator right here working, but all right. So here we have the totals, the SMT with the order block entry. I like the, if I didn't catch the turtle sub, I like to enter on the order block. And we have a PD array SMT right here. You can see it with NQ and ES. So let's continue with it. This is our opening range of the regular trading hours. We have the turtle soup. Let's say you enter on the turtle soup or something like that. Here is not chasing price, you are entering on the turtle soup. It's a safer way to enter the turtle soup. I like this one better rather than just placing a stop entry limit right there, the turtle soup. And go to regular trading hours that same day, which is here. We have the refresh the indicator. So when you wanted to highlight this, let's mark out manually. Remember, open, close, to open. PCE is right there. And you can see how good this is. You don't want to take it right there. You can take it on the other profit areas I said. There's also projections of the regular trading hours, but I don't use them. If you want to deep dive more on the regular trading hours projections and regular trading hours, uh, how you approach with it, you can go on the description and I will be linking up the telegram of the EAO, the engineer, a friend of mine, which is very good using regular trading hours. He's a beast. So you can see also how this works with projecting the regular trading hours gap. I guess that's it. We can wrap it up right here. If you have any doubts or something wasn't explained too clear, you can send a message on the Discord. Just tag me in and I will be pleased to answer your questions.